I think it's a very sensible thing. And actually, it's setting up for something I think a little more complex that I've got my eye on. Is we've got an issue that staking is going to rise in ETH because it's got a good yield, it's reasonably understandable, so it gives us some sort of risk-free rate within the space. The issue is you've also got the ETH burning, and you end up with a very limited supply of ETH in a bull market. Now, I understand that that as the cost of compute goes up, what you end up with is less burning over time, but there is an issue that you could end up with a very squeezy market, and it could be a problem for ETH, actually.
1 billion or more users could be reached in the next bull market, according to Real Vision founder and former Goldman Sachs executive Raoul. The macro guru predicts that as liquidity returns to markets, the cryptocurrency industry will experience another upswing thanks to the innovations that will attract new users. And in this cycle, the number of crypto users will explode from 300 million to 1 billion. And there will be widespread implementations of applications you never even considered. Whether it's e-ticketing using NFTs, non-fungible tokens, digital identity verification, widespread examples of Web3, defiance of decentralized finance, or something completely novel, the possibilities are endless. When asked if the next cycle would see another acceleration, he said, "Who the hell knows? With the amount of capital that's been invested in this space?" According to the macro guru, the Federal Reserve is done raising interest rates to combat inflation. In addition, he thinks that a recession is imminent, which will ultimately force the Fed to change course and lift markets through money printing. After the Fed's 2018 pivot, Raoul claims that the Fed has paused or will soon pause monetary policy this year. We'll see this continued acceleration until liquidity slows down, at which point we'll see pauses in the market, which is why I think they have paused, or at least should pause. Even if liquidity returns, which I don't expect, we could see corrections. Later, when the real money printing and rate cutting starts, we'll see acceleration as we begin to hit the recession and unemployment side of the equation.
The whole crypto market is driven by two things: network adoption, which is the long-term trend, and then in the middle is the liquidity cycle. The liquidity cycle hit a bottom in June, and we started seeing the forward-looking indicators come up, and we've seen already the central bank balance sheet was led by China, Japan, and then the US. That liquidity cycle is in full flow now. So that should continue all the way through till 2025. And that's why we started Crypto Spring. It happens every time we get to this point. So forward looking, the liquidity cycle should continue. And the banking situation is one of the examples of how the liquidity cycle comes in. The Chinese continue with M2 growth, the use of the central bank balance sheet. The Japanese have obviously been using yield curve control. So for me, we're in the right cycle now, and this should continue to play out. Now, within those, you get plenty of volatility. Usually you get 35% pullbacks are pretty common. Is this a 35% pullback we're in the middle of, or a shorter one? Don't know, don't really care. I did all of my allocation. I haven't sold anything ever. I just bought more in June, October, and January, and just used that opportunity into the big sell-offs, and that's it. The tightening, it's not about interest rates, it's about liquidity. So the change in interest rates is a part of the liquidity cycle, but the central bank balance sheet is the predominant driver, plus M2. There is about a 90% correlation between the price of crypto assets and a global liquidity index that we use, which is a function of the G5 central bank balance sheets plus the Fed balance sheet. Look at the G5 central bank balance sheets plus their M2. So look at the central bank balance sheet there with the Fed, and you saw that little spike, which was the injection of liquidity into the banking system, and all assets rose with that. And so, yeah, the interest rate rises are a red herring at this point.
Regarding the Bitcoin halving and price-driving crypto narrative, Powell made some noteworthy statements. Let's continue with the video.
It so happened that Bitcoin was launched exactly at the time that global interest rates went to zero. Everybody reset their entire interest rate and their entire debt burden at the same time. Everybody around the world. So every central bank, every country, every corporation, everybody reset rates at zero. It's created, and most of that debt is between 3 and 5 year debt. And what you've got is this 3.5 year cycle to 4 year cycle. And it's a global phenomena, and it was driven by interest rates being zero in 2009. And that is the Bitcoin halving cycle because Bitcoin was launched exactly at that point as well. So the liquidity cycle is the predominant driver. Now, doesn't mean it's wrong to follow the Bitcoin halving cycle because it happens to be the macro cycle as well. And that's all well and good. And if people understand it in those terms, that's fine. But it is actually the liquidity cycle that is global, and it is a complete structural change to the world that happened after 2008. That if you look at the ISM cycle, so the Institute of Supply Managers survey, it is exactly 3.5 year cycles. And we've never had this before. And it's just driven by the debt refi cycle globally. And people will move on the risk curve depending where you are. So when you're in crypto spring and there's uncertainty, you go to the safest, most secure, most known asset and the most liquid, which is Bitcoin. Then you tend to then spill out and you see then Ethereum start to catch up. But as people become more confident in the cycle itself, you see it spread further out of the curve. And you're starting to see that already. I mean, Solana had a huge run this year. There's a few things that have had a huge run. It's not consistent yet. So it's very common that the Bitcoin dominance falls. It's the same in the credit market. People buy treasuries first, then they buy corporate credit, then they buy junk bonds, then they all blow up and we start all over again. I mean, it's a standard way that we operate. So it's very common. So crypto's no different than financial markets.
There has been a halt in Bitcoin's price decline, and the leading cryptocurrency is now working to establish a footing above the $27,000 level. This follows a recent failure to maintain gains above $30,000 despite the economic downturn. Pseudonymous according to a tweet posted by crypto analyst Crypto_Prof on April 23rd, the declines could be temporary. After what he called the end of smart money accumulation, which was signaled by the quantitative-qualitative estimation exceeding zero, the historical data suggests that Bitcoin could experience a bull run. Bears are happy about a few red candles, but I warned you a few weeks ago that we always see a strong bull run after accumulation ends. As he put it, Bitcoin is still encountering significant resistance at $27,800, as noted by crypto trading expert and analyst Michael Van de Pape in a tweet he published on April 23rd. In this vein, he predicted that a bearish test of Bitcoin's current support level could spark bullish divergences. At the $27,800 level, Bitcoin is still being rejected. As funding rates are also finally resetting, a further test lower would generate bullish divergences and open up opportunities for long plays toward the 287.00 casual Sunday or Monday dump in reverse, says he. Meanwhile, Bloomberg senior commodities strategist Mike McGlone said previously reported by Finbold that after Bitcoin dropped below $30,000, it would likely experience a short-term pullback. Nonetheless, he hasn't changed his optimistic outlook for the future. The most recent Bitcoin correction started after the asset broke the $30,000 threshold for the first time in about 10 months. Bitcoin benefited from the turmoil in the U.S. banking sector and the positive sentiment surrounding the Federal Reserve's stance on inflation, which led to this price increase. Due in no small part to the high United Kingdom inflation data, Bitcoin has seen the largest short-term losses during the market correction. The sell-off in Bitcoin and other risky assets can be partly attributed to this development, which has raised fears of higher interest rates for a longer period of time. Robert Kiyosaki, author of the best-selling book Rich Dad, Poor Dad, believes Bitcoin is about to experience a meteoric bull run. People are starting to see the appeal of the leading cryptocurrency, as he claims. Kiyosaki predicted 2 days ago that Bitcoin's value would increase by over 257%. From its then current level of $27,973. He thinks that after a series of Federal Reserve interest rate hikes meant to draw down inflation, people will increasingly prefer the king crypto over the US dollar, leading him to predict that Bitcoin will eventually trade for $100,000. It also implies that conventional financial institutions, such as banks, which have relied on government bailouts to survive, are less stable than Bitcoin. Despite some setbacks and intense pressure from anti-cryptocurrency groups, the crypto market appears to be on the upswing as the battle between fiat and cryptocurrencies continues. With the arrival of altcoin and meme season, what do you anticipate for cryptocurrencies in the second quarter? Share your thoughts with us in the remarks section. That's all for today's video on Market Empire. We hope you found the insights shared valuable and informative. Don't forget to subscribe to our channel and hit the notification bell to stay up to date with the latest news and insights from the world of finance. If you have any questions or comments, feel free to leave them down below. Thank you for watching, and we'll see you in the next video.